The first time I realized how much power one man could have over the markets, it wasn't during a Wall Street crash nor a central bank announcement. It was a single tweet, 7 words, sent by Elon Musk that wiped billions off market caps within minutes. I remember staring at my trading screen that morning, coffee untouched, watching the candles on Tesla's chart explode like fireworks. There was no earnings report, no news leak, no insider scoop. Just one line: Tesla stock price is too high, IMO. And suddenly, it dropped. Not just a few percentage points, but hard and fast, like gravity had decided to prove a point. That was the day I realized, in today's market, information is the new form of market making. Tweets are the new stop hunts. And perception, not fundamentals, moves price faster than any macro factor ever could. As a trader of 15 years, I've seen countless manipulations, from central banks to hedge funds, from algorithmic traps to liquidity sweeps. But none of them played the game quite like Elon. He wasn't just trading assets, he was trading narratives. Every time he posted about Dogecoin or hinted at selling Tesla stock, waves of fear and greed crashed across retail traders like emotional tsunamis. Some made millions in minutes, others lost everything before lunch. And yet, beneath the chaos, there was a method, a structure to his madness. It wasn't pure randomness, it was the art of attention arbitrage. He didn't need to own Wall Street, he just needed to control what everyone was looking at. That's what I want to show you today. How the game really works. Why Musk's market influence is just the latest evolution of an old Wall Street trick. And how, if you understand it, you'll never see manipulation the same way again. Because the truth is, markets don't move because of Elon Musk. They move because of us, the crowd that reacts to him.
I started trading in 2008, the year the financial world burned. I was young, reckless, and armed with more confidence than skill. Like many new traders, I believed markets were fair, that prices reflected logic, and that smart people in suits made rational decisions. It didn't take long for that illusion to collapse. During those chaotic months, I watched Lehman Brothers vanish overnight, entire portfolios melt down, and CNBC anchors speak with that same hollow tone people use at funerals. Every candle that year felt personal. It was like watching the world discover that the system wasn't broken. It was designed that way. That was my first lesson in manipulation. Not the kind done in secret chat rooms or with insider trades, but something far more invisible: incentive manipulation. Everyone was playing their part. Central banks printing hope, media spinning fear, hedge funds selling safety. The game wasn't about truth. It was about narrative control. Fast forward to 2020. I'd been trading for over a decade, survived flash crashes, Swiss franc shocks, and Bitcoin's birth. Then Elon Musk entered the stage, not as a CEO, but as a market force. His tweets could move more money than entire governments. At first, I dismissed it. I told myself, it's just hype, just noise. But the charts said otherwise. When Musk tweeted a meme about Dogecoin, I saw liquidity shift like a tidal wave. Volume spiked not because of fundamental value, but because of collective belief. Retail traders weren't analyzing balance sheets, they were chasing emotion, validation, identity. And that's when I realized Elon had weaponized the same force I'd seen since 2008, the human need to believe. But this time, it wasn't Wall Street pulling the strings. It was one man with a smartphone and a cult-like following. He didn't sell financial products. He sold attention. And attention, in the digital age, is the purest form of capital. Every retweet was liquidity. Every meme was a sentiment shift. Every to-the-moon post was another injection of dopamine into a market addicted to hope. As I watched the chaos unfold, Tesla's meteoric rise, Dogecoin's carnival, Bitcoin's Musk-induced volatility, I began to ask myself, was this manipulation or evolution? Maybe the real manipulation wasn't in what Musk said, but in how easily the market reacted. Because when emotion becomes the driving force, every tweet is a catalyst, and every trader is part of the feedback loop. That was the seed of a painful realization. The markets weren't getting crazier, we were just becoming easier to manipulate.
The first time I lost big because of Elon Musk, I didn't even realize it was happening. It was early 2021. Tesla had just entered the S&P 500. Bitcoin was climbing relentlessly, and Dogecoin was becoming the world's inside joke. Everywhere I looked, traders were turning memes into millions. My trading group was split in two. Half believed Musk was a visionary, the other half said he was a manipulator. I didn't care which one was right, I just wanted to ride the wave. Then came the tweet, a simple one. Tesla has suspended vehicle purchases using Bitcoin. Just like that, the market imploded. Bitcoin plunged nearly 20% in a single night. I had leveraged long positions, not massive, but enough to sting. I remember staring at the screen at 3 a.m., watching red candles erase weeks of gains. It wasn't just the money that hurt, it was the humiliation. I'd spent years building my system, learning from crashes, tuning my risk parameters, and one man's tweet had reduced it all to chaos. That was the moment I understood emotional exposure. Not just financial exposure, emotional. Because in trading, losing control of your emotions is the ultimate liability. The next few weeks were a blur of denial, anger, and justification. I told myself, it's just bad luck. No one could have seen that coming. But deep down, I knew the truth. I hadn't been trading a system. I'd been trading a story. His story. Musk wasn't selling stocks or coins. He was selling conviction. And conviction, when misplaced, is lethal. Every tweet, every meme, every cryptic reply, they weren't market signals, but emotional triggers. He'd mastered the art of selective chaos. When he said Dogecoin is the people's crypto, prices exploded. When he called it a hustle on SNL, they collapsed. The same mouth that built dreams also detonated them. I remember talking to a younger trader I mentored. He had gone all in on Dogecoin before Musk's SNL appearance, convinced it would skyrocket. I tried to warn him, the moment of maximum hype is usually the peak. He didn't listen. When Dogecoin tanked, he lost nearly everything. He stopped trading for months. That hit me harder than my own loss, because it wasn't just money we were losing. It was belief. Belief in systems, in logic, in fairness. That's when I started digging deeper, not into charts or indicators, but into behavioral dynamics. I realized manipulation isn't just about price movement. It's about timing, emotion, and social proof. Musk didn't need insider information. He had influence asymmetry, the ability to alter perception at scale. And yet, the painful truth was that he didn't force anyone to follow him. We chose to. That was my mistake, and the market's mistake. We had turned a human into a market signal. So when people said, Musk manipulates the market, I began to think differently. Maybe he just revealed how fragile and reactive we'd become. Because the modern market isn't driven by fundamentals anymore. It's driven by narratives. And Musk was simply the most skilled storyteller of them all. The pain wasn't losing money. The real pain was realizing that after 15 years of trading, I was still vulnerable to the same illusion I had as a rookie, that I could outsmart mass psychology. That night, I deleted Twitter from my phone. And for the first time in a long while, I started trading again. Not against the market, not against Elon, but against my own biases.
It took me months to regain my rhythm after that loss. I stopped trading high volatility assets, avoided social media, and buried myself in data.
I analyzed every move Musk made, not to predict his next tweet, but to understand why it had such power. And then, one day, while studying the market reaction to another Elon tweet, this one about Dogecoin's efficiency versus Bitcoin, something clicked. The chart didn't just show volatility, it showed liquidity displacement. Here's what I mean. Musk's tweets didn't create value, they redirected it. Every time he spoke, retail traders rushed in like water chasing gravity. Big players, the so-called smart money, didn't fight the flow. They anticipated it. They'd buy early, let the crowd push prices higher, then quietly exit while retail scrambled for crumbs. That was the moment I realized Musk wasn't manipulating the market. He was signaling to it. His influence acted like a beacon for liquidity. And then one day, while studying the market reaction to another Elon tweet, this one about Dogecoin's efficiency versus Bitcoin, something clicked. The chart didn't just show volatility, it showed liquidity displacement. Here's what I mean. Musk's tweets didn't create value, they redirected it. Every time he spoke, retail traders rushed in like water chasing gravity. Big players, the so-called smart money, didn't fight the flow, they anticipated it. They'd buy early, let the crowd push prices higher, then quietly exit while retail scrambled for crumbs. That was the moment I realized Musk wasn't manipulating the market. He was signaling to it. His influence acted like a beacon for liquidity. And then, all of a sudden, it all made sense. This wasn't new. Every market has always had its signals. The Fed chair's tone, oil ministers' statements, earnings leaks, even rumor mills on Wall Street. The only thing that changed was the medium. Musk had simply digitized manipulation. He was the first retail influencer with institutional impact. That insight shifted how I saw everything. Instead of seeing Twitter as noise, I started treating it as sentiment data, a living, breathing indicator of market psychology. I built a model, nothing fancy, just a sentiment to volatility correlation system, using tweet timestamps, keyword strength, and trading volume reactions. Within weeks, I began spotting patterns that most traders missed. For instance, Musk's tweets had a decay curve. Their impact lasted between 12 and 36 hours, depending on tone, timing, and market context. But more importantly, I discovered something profound about the market itself. We weren't trading assets anymore. We were trading attention. Musk had proven that in modern markets, narrative liquidity was just as real as financial liquidity. When enough people believe in a story, the story becomes the market. That realization didn't just change my strategy, it changed my philosophy. I stopped thinking like a chart reader and started thinking like a storyteller. When I entered a position, I no longer asked, "Is this asset undervalued?" I asked, "Whose story is about to dominate?" And I learned something critical. The market always rewards the storyteller before it rewards the fundamentalist. I began backtesting this idea with major events, not just Musk's tweets, but Fed announcements, Apple product launches, even geopolitical flare-ups. Every time, the same dynamic appeared. Perception precedes price. And that's when it hit me. This was the new metagame. The traders who thrive in this age aren't just technically skilled. They're emotionally detached and narratively aware. They know that volatility isn't chaos, it's communication. So instead of trying to beat the manipulation, I learned to surf it. To position myself not against the influencers, but alongside the wave they create. The irony was humbling. The very person who caused my biggest loss also gave me my biggest breakthrough. Elon Musk taught me that markets don't move on truth, they move on belief. And belief, once ignited, is the most powerful currency of all.
Most traders think manipulation is about secret meetings or insider deals, like a cabal of whales moving charts with invisible levers. But the truth is far simpler and far more dangerous. Manipulation today is psychological, not mechanical. Let me break it down. In any market, crypto, stocks, forex, there are three layers of participants. 1. Retail liquidity, the crowd. They provide volume, volatility, and emotion. 2. Institutional liquidity, the smart money. They provide direction, patience, and structure. And 3. Narrative liquidity, the storytellers. They provide the fuel. And here's the kicker. These three layers don't compete. They feed each other. When Elon Musk tweets Dogecoin to the moon, retail traders flood in, institutional traders anticipate exits, and the narrative amplifies itself. It's not a conspiracy. It's a reflex loop. Smart money doesn't create hype. They use it. Retail doesn't cause volatility. They amplify it. Narratives don't emerge by accident. They evolve through repetition, belief, and timing. Now, let's connect that to what I call the 5 stages of modern manipulation. Stage 1. Seeding the story. Every move begins with framing, a statement, rumor, or headline that challenges existing beliefs. When Elon Musk said Tesla will no longer accept Bitcoin, it wasn't random. It was narrative seeding. He framed Bitcoin as environmentally unsustainable. That single message created a moral tension that split the market in half, believers versus skeptics. That tension was liquidity. Stage 2, amplification. Once the idea is seeded, the media ecosystem takes over. Articles, YouTubers, influencers, all feeding on clicks. The story snowballs, the narrative becomes mainstream truth, and price reacts to perception rather than fundamentals. Traders call this FOMO. I call it narrative inertia. Once a story gathers speed, it keeps moving until the energy runs out. Stage 3, positioning. While the crowd is reacting emotionally, institutions are positioning rationally. They don't chase candles, they track liquidity pools. They watch where retail orders stack. Stop losses, liquidation zones, breakout traps. Remember, every trade needs a counterparty. For every buyer driven by hope, there's a seller driven by calculation. So while retail buys into the hype, the smart money prepares their exit. Stage 4, extraction. This is where the game completes its cycle. Liquidity floods in, from retail, from FOMO, from blind confidence, and the professionals start unloading. Price spikes, volume peaks, and then the reversal hits. Those who believed in the story hold on, hoping it'll bounce back. But it doesn't, because the story has already served its purpose. Stage 5, silence. Every manipulation ends in silence. The tweets stop, the news cycle moves on, the chart flatlines. Retail loses interest. That's when accumulation begins again, quietly, systematically, until a new story reignites the cycle. When I started understanding these patterns, I stopped fearing volatility, because I realized something crucial. The market isn't designed to deceive you. It's designed to test your patience. Musk, the media, even the algorithms, they don't force you to buy or sell. They simply invite you to play your role. And your role is determined by your awareness. If you act from emotion, your liquidity. If you act from observation, your strategy. And here's the paradox. Even manipulation can be your ally if you learn to read it. For example, when I noticed Musk's AI tweets spiking attention across tech stocks, I didn't chase Tesla. I tracked secondary beneficiaries, Nvidia, AMD,
and small-cap AI firms. The crowd followed the noise, I followed the flow. That trade alone made back everything I'd lost in the Dogecoin crash, and more. Because in this new market, manipulation isn't a trap, it's a map. It tells you where the energy is, where belief clusters, and where opportunity hides. The lesson? Don't try to fight the game. Learn to play it better.
When I talk to younger traders today, they often ask, if everything is manipulated, how can we ever win? It's a fair question, one I used to ask myself. But over time, I learned that the problem isn't the manipulation itself, it's the illusion of fairness. Markets have never been fair. They've always been games of asymmetric information, emotion, and timing. Once you accept that, you stop chasing equality and start chasing clarity. So here's how I adapted, how you can survive and even thrive in a world where tweets move billions. 1. Stop reacting, start preparing. Most retail traders respond to events. Professionals anticipate them. When Musk or any public figure says something explosive, the crowd rushes to react. But if you've already mapped key price zones, supply, demand, liquidity traps, you know exactly where the manipulation will hit before it happens. For example, when Musk changed Twitter's logo to the Doge symbol in April 2023, the entire crypto world went crazy. Price surged 30% in hours. But I didn't buy. I waited because I knew the move was pure sentiment, a spark, not a structure. Within 48 hours, price retraced to its origin, and that's where I entered short. Trading isn't about reacting fast, it's about preparing deep. 2. Understand who the narrative serves. Every story in the market has a beneficiary. Ask yourself, who profits if this narrative spreads? When Musk hypes Dogecoin, Tesla's balance sheet benefits indirectly. Liquidity moves from risk-off assets to risk-on, and investor sentiment lifts tech valuations. When he criticizes Bitcoin for energy use, he positions himself as an innovator in sustainable finance, aligning Tesla with ESG investors. The message isn't the manipulation, the alignment is. So whenever a narrative breaks, trace the benefit chain. Follow the incentives, not the emotions. 3. Protect your capital like a professional. Smart traders don't think in terms of winning trades. They think in terms of capital preservation. Every dollar saved from loss is a dollar ready for opportunity. Set your maximum risk per trade. Mine is 1%. Use asymmetric reward structures. Risk 1 to make 3. Never average down on hype. And when the market feels euphoric, when everyone on Twitter sounds like a genius, that's your cue to tighten stops or go flat. In manipulated markets, defense is alpha. 4. Study emotional flow, not just price flow. Charts don't move because of numbers. They move because of belief. Fear and greed leave footprints in volume, wicks, and volatility. So instead of obsessing over technical setups, learn to read the rhythm of emotion. Ask, are people angry or euphoric? Are headlines confident or defensive? Are influencers doubling down or going silent? That emotional temperature tells you when manipulation is peaking and when reversal is near. One of my favorite indicators isn't on TradingView. It's called social silence. When hype dies down but price holds steady, that's when professionals are accumulating quietly. 5. Trade the reaction to manipulation, not the manipulation itself. You'll never beat the algorithm to a Musk tweet, but you can trade the aftershocks. When a story causes a massive spike, wait for the crowd to exhaust. Look for liquidity sweeps, fake breakouts, wicks beyond structure. Then enter in the opposite direction with tight risk.
That's how you turn manipulation into momentum. 6. Build emotional anti-fragility. The most powerful traders aren't those who predict right. They're the ones who stay calm when everyone else panics. I meditate every morning before I check a single chart. I journal after every losing trade. And I remind myself daily, I don't trade markets, I trade my own reactions to them. Because once you master your reactions, you become immune to manipulation. In 15 years of trading, here's my truth. You can't control Elon Musk, you can't control the algorithms, but you can control your awareness, your patience, and your process. The market doesn't reward emotion, it rewards endurance. And in a game built on illusion, the most dangerous weapon you can have is clarity.
There was one night, I remember it vividly, when everything I believed about the market shattered. Bitcoin had just crashed 40% in a single week. Twitter was in chaos. Elon had posted something cryptic, a meme with no caption, just a laughing face and a rocket. Within minutes, the price spiked, liquidated shorts, then reversed violently. I was on the wrong side of that trade. Not because I didn't have a plan, but because I didn't have control. I had built what I thought was a perfect setup. Liquidity levels marked, risk tight, conviction high. But when that tweet hit, my heart skipped. I broke my own rule. I added size, thinking this is the moment. Minutes later, I watched my position implode. I remember sitting there, staring at the screen, not angry, just empty. I had spent years mastering charts, yet I still danced to the rhythm of someone else's emotions. That night, I realized something fundamental. It's not the market that manipulates us. It's our attachment to certainty. Elon didn't make me lose that trade, my ego did. I was still trading like the crowd, reacting to noise, seeking validation, confusing volatility for opportunity. So I stepped away. For a week, I didn't trade, I didn't check charts, I didn't scroll Twitter. Instead, I started journaling. Every emotion, every impulse, every thought that crossed my mind during market hours. And what I found was terrifying. I wasn't trading for profit anymore, I was trading for significance. Each trade had become a way to prove I was smart enough, worthy enough, in control enough. That was my awakening. Because until you face the real reason you trade, you'll never evolve. After that week, I came back different. Not calmer, but clearer. I rebuilt my process from zero. Now, before every trade, I ask one question. Am I acting from clarity or from noise? If it's noise, I don't touch the keyboard. That simple filter changed everything. I started seeing patterns others ignored. I noticed how the crowd always reacted to headlines within minutes, but real opportunities came hours later once liquidity reset. I stopped chasing price. I started tracking behavior. That's when I first understood the phrase, trade what's behind the candle. Behind every wick is fear. Behind every consolidation is patience. Behind every breakout is someone trapped. When you can read that language, you no longer need signals. You become the signal. It's strange. The more detached I became emotionally, the more profitable I got. And not because I found some magic indicator, but because I stopped fighting the current. Manipulation didn't scare me anymore. It became my map. When Elon tweeted, I no longer panicked. I observed. When volatility spiked, I didn't react. I waited. And when the crowd screamed unfair, I smiled. Because I finally understood the market isn't fair, but it's truthful.
It always reveals what's hidden in us. That was my turning point. The moment I stopped trying to predict the market and started listening to it.
If you strip away the charts, the indicators, and the headlines, what remains is psychology. Because the market, at its core, isn't a financial system. It's a mirror of collective belief. And few people have mastered that mirror quite like Elon Musk. You see, what most traders misunderstand about influence is this. It's not about what you say. It's about when and why you say it, and how it aligns with the emotional state of the crowd. 1. The emotional liquidity cycle. Liquidity isn't just money sitting on the order book. It's emotion waiting to be triggered. When fear peaks, liquidity hides. When greed peaks, it floods in. The most powerful players, institutions, whales, or influencers, don't move markets directly. They redirect emotion. Musk understands this perfectly. He doesn't create volatility. He unlocks it. When he tweets a meme about Dogecoin or Bitcoin, he's not giving information. He's giving permission. Permission for the crowd to act on their existing bias, to justify greed or panic under the illusion of reason. That's the real art of manipulation. Not forcing action, but framing emotion. 2. The feedback loop of power. Influence in markets works like an echo chamber. Musk tweets, media amplifies. Traders react, price moves, media reports, Musk gains more credibility. This creates a feedback loop of perceived omnipotence. And once the crowd believes someone moves markets, their belief alone makes it true, even if the fundamentals say otherwise. It's not the tweet that moves the price, it's the expectation of the tweet. That's why I call this the echo of authority. The market doesn't move on facts, it moves on faith. 3. Liquidity as energy transfer. Think of liquidity as energy and influencers as conductors. They don't create energy, they redirect it from one group to another. When Elon pumps Dogecoin, capital flows from retail into early holders. When panic hits after a sell-off, liquidity flows from weak hands into smart money accumulation. Every major move in the market is essentially a transfer of conviction. The crowd surrenders belief, professionals collect it, price eventually confirms it. That's how manipulation and value discovery coexist. They're not opposites, they're sequential. 4. The mirror principle of crowd psychology. Here's something most traders never realize. The market doesn't respond to information, it responds to the crowd's reflection of that information. When Elon posts a tweet, half the market sees hope, the other half sees fear. The tweet itself is neutral, the projection isn't. That's why I stopped analyzing what he says and started observing how people react to it, because crowd reaction is the true indicator of positioning. If everyone agrees, the move is over. If everyone's confused, the opportunity begins. 5. The shift from attention to awareness. Early in my career, I chased attention. Every time a big name moved the market, I wanted to ride the wave. Now I chase awareness. Awareness of where emotion is concentrated and how it might unwind. Awareness gives you the patience to wait for exhaustion, because once the emotional liquidity is drained, price must return to equilibrium. That's the secret most don't see. The market doesn't move from news to price. It moves from emotion to balance. 6. The paradox of manipulation. The irony is the more you study manipulation, the less you fear it, because you start to realize it's predictable. Every pump has a pattern.
Every panic has a structure. The tweets, the headlines, the breaking news, they're all just triggers for deeper emotional cycles. When you stop seeing Elon Musk as the puppet master and start seeing him as a signal within the larger system of liquidity psychology, the fear dissolves. You're no longer swimming in chaos. You're surfing on rhythm. Influence, in the end, is just another form of liquidity. And liquidity, my friend, is never destroyed. It only changes hands. The question is, will you be the one handing it over, or the one collecting it?
In the years that followed my awakening, something inside me shifted. Quietly, but profoundly. Trading stopped feeling like a battlefield. It started to feel like music. Every swing, every spike, every fake-out, it all began to reveal rhythm. A rhythm not of randomness, but of repetition, of human nature looping endlessly through fear and greed. I remember one morning, during the height of the 2021 mania, Dogecoin was up 800% in a month. Elon tweeted a single word, Dogefather. The world went mad. Retail traders flooded in, convinced they were part of something historic. Forums, discords, TikTok, all vibrating with the same manic pulse. And I sat there, watching my screen, as calm as ever. Because I'd seen this movie before. I didn't short. I didn't buy. I waited. 3 days later, when the euphoria reached its loudest pitch, price began to falter. That's when I entered, small, measured, deliberate. 2 weeks later, the market collapsed. But I wasn't proud. I wasn't smug. Because that trade wasn't about profit. It was about proof. Proof that I had finally learned to see through the chaos. When you stop reacting to the noise, you begin to recognize the deeper symphony beneath it all. The tweets, the headlines, the memes, they're surface ripples on an ocean of behavior. Elon Musk, he's not the cause of volatility. He's the conductor of sentiment, amplifying what's already there. And once you understand that, his power over you vanishes. Because the truth is, every trader faces their own Elon. It could be a breaking news headline, a YouTuber, or even their own ego whispering, "This time it's different." But the market always humbles us back into silence. And in that silence, clarity begins. Here's what clarity feels like. You wake up and don't check your phone immediately. You open your charts and feel nothing. No rush, no fear. You wait for the market to come to you. Clarity isn't prediction. It's peace. It's the moment you realize the market doesn't owe you anything. And that's exactly why it gives you everything when you're ready. Today, I still watch Musk's tweets, but I no longer react, I interpret. I see liquidity, psychology, and opportunity, not noise. And every time he posts something outrageous, I smile. Because that chaos, that unpredictability, that's what keeps the game alive. That's what separates those who seek thrill from those who seek mastery. The moment you stop needing the market to behave, it starts rewarding you. The moment you stop chasing clarity, it starts finding you. I used to think trading was about beating others.
Now I know it's about beating yourself, the impulsive, fearful version of you that still believes someone else controls your fate. Elon Musk doesn't move the market. He moves people. And if you can see that clearly, if you can watch the storm without stepping into it, then you've already won. Not just as a trader, but as a human being capable of clarity in a world addicted to noise.
When I look back at my journey, from the chaos of the FTX collapse to the mania of Elon Musk's tweets, one truth has never changed. The greatest manipulation doesn't happen on the charts. It happens inside your mind. Every trader wants to believe they're rational, but the market isn't built to reward rationality. It rewards discipline. And discipline isn't something you learn. It's something you become. In the early years, I chased every spike, every rumor, every guaranteed setup. I thought information was power, until I realized it was noise disguised as knowledge. The real power was emotional control. It wasn't knowing what Elon Musk would tweet next. It was knowing how I would respond when he did. That's the secret Wall Street doesn't teach, and social media doesn't want you to hear. If you can't control your reactions, someone else already controls your account. So here's what I tell every young trader who joins my desk now. Forget the hype, forget the gurus, forget chasing the next big move. Learn to do 3 things with consistency. 1. Observe without reacting. Every manipulation, whether by a billionaire, a news cycle, or your own emotions, begins with reaction. The moment you observe instead of engage, you reclaim control. 2. Trade the structure, not the story. The story can be seductive, like Dogecoin is the future, or FTX is too big to fail, or this stock is going to the moon. But the chart never lies. Price, volume, and behavior will always expose the truth long before the headlines do. 3. Master one setup and trade it like a sniper. You don't need 10 strategies. You need one edge, refined, tested, and executed with precision. That's what separates pros from gamblers. The markets will always have new Elons, new faces, new narratives, new chaos. But chaos isn't your enemy. It's your environment. You can't stop manipulation, but you can become immune to it. You can't predict the future, but you can prepare for it. And that's the real difference between a trader who survives and one who wins. When I trade now, I think of it like surfing. You don't fight the wave. You study it, feel its timing, and position yourself for when it lifts you. The wave doesn't care if you're ready, but the market rewards those who are. The same applies to life. There will always be forces trying to push you off balance. Noise, fear, greed, ego. But if you can stay centered in your process, your edge becomes unshakable. That's my lesson after 15 years of trading. You don't master the markets by mastering data. You master them by mastering yourself. Every great trader I've met had one thing in common: emotional neutrality. They could watch millions swing up or down and remain absolutely still inside. Because when the world is loudest, clarity whispers. And that whisper, that inner voice of patience, logic, and calm, is your true alpha. So if you take anything from this story, let it be this. Don't envy the Elons, the manipulators, or the market movers. Study them, learn from them, but never follow them. Trade your plan, build your conviction, and remember, in this game, your greatest edge is not prediction, but peace. Because when the crowd chases chaos, you'll already be on the other side, calm, consistent, and quietly profitable. That's the trader's way.
That's the Staro Markets way.